Florida's real estate market is cooling, and in some cities, it's turning ice cold. In 2025, home prices in parts of the Sunshine State are dropping fast. $50,000, $75,000, even $100,000 below last year's highs. Curious where buyers are vanishing and inventory is exploding? Which once sizzling markets are now facing 20% to 30% price corrections? From $10,000 a year insurance premiums to double the inventory levels. Today we're counting down the top 10 cities in Florida where home prices will crash in 2025. Number 10. Northport. Northport, a charming city in Sarasota County that's suddenly caught in Florida's housing storm. Just a couple years ago, this area was hot. In 2022, the median home price skyrocketed to around $450,000, fueled by pandemic-era buyers searching for affordable Gulf Coast living. Fast forward to 2025, the winds have shifted. That median has already slipped under $400,000 and is projected to fall another 10 to 15% by year's end. What's driving the drop? Well, several forces are colliding here. First, inventory is swelling. There are now over 1,500 active listings, nearly double what we saw in late 2023. More supply means sellers are having to slash prices to stay competitive. Another key factor, insurance shock. Florida homeowners are facing insane hikes, with premiums jumping 200 to 300% in some coastal areas. In Northport, average annual insurance can top $6,000, a cost that's scaring off many buyers. Combine that with flood risk designations after Hurricane Ian in 2022 reshaped flood maps, and the buyer pool has shrunk. Also, interest rates hovering around 6.5 to 7% are limiting how much buyers can afford. Someone paying $2,500 a month for a home in 2022 is now looking at $3,200+ for the same property, thanks to higher rates and insurance. And demand? It's cooling fast. In early 2024, Northport homes were going under contract in just 15 days. Now, the average time on market is over 60 days and climbing. Sellers who bought during the boom are getting nervous, leading to more aggressive price cuts. Zillow reports that nearly 40% of listings in the area have seen price reductions in the past 3 months. If you're thinking of buying here, patience could pay off. Experts predict Northport may see prices slide another 15 to 20% by mid-2026, especially in outer neighborhoods. It's a textbook case of how fast fortunes can shift in Florida's volatile market. Number 9. St. Petersburg. St. Petersburg, a city packed with charm, art, and waterfront vibes. Just 2 years ago, this place was on fire. In 2022, median home prices soared past $500,000, a jump of nearly 35% in just 1 year. But in 2025, the sizzle is cooling fast. Current median prices have already dipped to around $460,000, and many experts expect another 10 to 15% correction coming soon. Why? Let's break it down. First, inventory is ballooning. In early 2023, there were about 1,200 active listings. Now, over 2,500 homes are sitting on the market, a massive 110% increase. With more competition, sellers are dropping prices to attract buyers. Add in skyrocketing insurance premiums, averaging around $7,000 annually for many coastal properties, and affordability is getting crushed. Buyers who could once budget for a $500,000 home are now stuck looking at $400,000 listings due to higher costs of ownership. Interest rates near 7% haven't helped. Back in 2021, a 30-year mortgage on a $500,000 home cost about $2,100 a month. Now, that payment can exceed $3,300 per month with today's rates and insurance. Ouch! No wonder buyer demand is sliding. Homes that used to go pending in under 20 days are now sitting for an average of 55 days. Nearly 35% of listings have seen price reductions in the last 90 days. And then there's the looming climate risk. Flood zone remapping and rising sea levels have left buyers wary, especially in low-lying neighborhoods like shore acres. This is pushing investors to offload properties, adding even more supply to an already saturated market. Bottom line, St. Pete is still gorgeous, but its market is wobbling. If you're a buyer with patience, better deals may be ahead by late 2025 into 2026. For now, sellers are feeling the pressure, and this correction wave is gaining momentum. Number 8. Lakeland. Central Florida's hidden gem that became one of the state's hottest pandemic boomtowns. But guess what? The boom is turning into a bust. In 2021, the median home price here was a modest $240,000. By mid-2023, it soared to nearly $370,000, a jaw-dropping 54% increase in just 2 years. Fast forward to 2025, the tide is turning. Median prices are already sliding, currently hovering around $340,000, and many analysts expect a 15 to 20% correction this year alone. What's driving the fall? First, Lakeland saw a massive surge in new construction. Thousands of homes built to meet the demand of incoming remote workers. But now inventory has doubled, with over 2,200 active listings compared to just 900 in 2022. Builders are slashing prices and offering incentives to move units, putting downward pressure on resale values. Second, affordability crunch. With mortgage rates near 7%, monthly payments on a $350,000 home have jumped from about $1,500 per month in 2021 to well over $2,600 per month today, pricing out many first-time buyers. Add in rising insurance premiums, often $5,000 plus per year, and many would-be buyers are hitting pause. Homes that once sold in under 15 days are now lingering for 45 to 60 days on average. Roughly 40% of listings have had price cuts in the past 90 days. Investors who rushed in during the boom are starting to bail, adding more supply. And with wage growth in Polk County not keeping pace with home price inflation, the market is simply unsustainable at 2023 highs. For buyers, deals are coming. Experts predict Lakeland could see prices settle back into the $300,000 to $320,000 range over the next 12 to 18 months. It's a clear example of how fast Florida's real estate tide can shift. Number 7. Jacksonville, Florida's largest city by area and one of its fastest-growing markets during the pandemic boom. In 2021, median home prices here hovered around $280,000. By late 2022, they surged past $400,000, an eye-popping 43% gain. But in 2025, cracks are showing. Median prices have dipped back to around $375,000, with many experts forecasting another 10 to 15% drop this year. So what's going on in this sprawling metro? First, inventory surge. In 2022, active listings sat around 3,000. Today, over 7,500 homes are on the market, a staggering 150% increase. Builders went wild here during the boom, and now the market is saturated. Buyers suddenly have options and bargaining power they haven't seen in years. Second, interest rates are biting hard. A $400,000 home that cost about $1,600 a month in 2021 now runs $2,800 plus a month with today's 6.5 to 7% rates and hefty insurance bills, often $6,000 plus per year. Affordability is stretched thin, especially for first-time buyers and young families. And demand? Slowing. Jacksonville's days on market metric jumped from 20 days in 2023 to 50-plus days in early 2025. Nearly 38% of listings have seen price cuts recently. In addition, the city faces growing climate risks, with parts of the metro newly designated as flood zones post-Ian and Matthew, which is scaring off some investors. Also, many corporate relocations that fueled the boom have cooled, and remote work trends are reversing a bit. Some buyers who moved here are now heading back to bigger markets or pausing new purchases. Bottom line, Jacksonville's market is in correction mode, and savvy buyers may find solid opportunities in late 2025 to 2026. Number 6. Orlando, the land of theme parks, sunshine, and lately, a seriously wobbly housing market. Just a couple of years ago, Orlando was one of the fastest appreciating markets in the entire country. Median home prices shot from $310,000 in 2021 to an eye-popping $435,000 by mid-2023, a massive 40% gain. But in 2025, that upward ride has stalled. Median prices are already down to about $400,000 and could fall another 10 to 15% before the year is out. Why the cool down? First, inventory explosion. Back in 2022, there were roughly 3,500 active listings in Orlando. Now, more than 8,000 homes are on the market, a 130% increase. Builders were racing to meet pandemic demand, and now supply has far outpaced demand. Many new build communities are loaded with incentives and price cuts, putting serious pressure on resales. Second, the affordability squeeze. A $400,000 home today costs nearly $3,000 a month to own when you factor in 7% mortgage rates and $5,000 plus annual insurance premiums. That same home cost about $1,900 a month in 2021. Huge difference. For many buyers, the math simply doesn't work anymore. Also, Orlando's job market, while diverse, is heavily service and tourism-oriented, which makes it more vulnerable to economic swings. Wages haven't kept up with housing costs. Meanwhile, flood zone remapping and rising insurance premiums are scaring some buyers away from older areas prone to water damage. The result? Homes that were flying off the shelves in under 10 days are now sitting 45 to 60 days or more. Roughly 42% of listings have had recent price reductions. And with more units hitting the market every week, that trend looks likely to continue. Number 5. Winter Haven. Winter Haven, a cozy city in Polk County, once known for its beautiful lakes and small-town charm. But in recent years, it became one of Florida's hottest Zoom towns, attracting remote workers and investors alike. Median home prices jumped from just $230,000 in 2020 to nearly $360,000 by mid-2023, a wild 56% surge. But in 2025, the winds are shifting. Median prices have already dipped to around $330,000, and many experts predict another 15 to 20% correction this year. What's causing the drop? Inventory overload is a big factor. In 2021, there were about 500 active listings. Today, over 1,400 homes are sitting on the market, nearly triple. Builders flooded Winter Haven with new subdivisions during the boom, and now buyers have plenty of choices. Then there's the affordability pinch. Thanks to 7% mortgage rates, monthly payments on a $330,000 home have soared from $1,300 per month in 2021 to over $2,300 per month today. Add in rising insurance premiums, averaging $4,000 to $5,000 per year, and buyers are balking. Demand is clearly cooling. Homes that once sold in under 2 weeks now linger for 45 to 60 days or longer. And more than 45% of listings have had price cuts recently. The local economy is also a factor. Many jobs here are in lower wage sectors, making it tough for residents to absorb these higher costs. Investors who scooped up properties during the frenzy are starting to exit, adding more supply and fueling the correction. And with wage growth in Polk County not keeping pace with home price inflation, the market is due for a reset. For buyers, deals are on the horizon. Experts believe prices could settle back into the $280,000 to $300,000 range by 2026. The boom may be over, but Winter Haven's correction could open the door for more sustainable growth ahead. Number 4, West Palm Beach. Glamorous West Palm Beach, a city of yachts, sunshine, and now a real estate market on shaky ground. During the pandemic boom, West Palm Beach saw a staggering surge. Median home prices leapt from around $350,000 in 2020 to a jaw-dropping $600,000 by 2023, a nearly 71% increase. But in 2025, the tide is clearly turning. Current median prices have already dipped to about $550,000, and further declines of 10 to 15% are widely expected. So what's driving this correction? Affordability crisis, plain and simple. Owning a $550,000 home here now costs nearly $4,500 per month when factoring in 7% mortgage rates and outrageous insurance premiums, often $8,000 to $10,000 per year due to hurricane and flood risk. In 2021, that same home cost about $2,800 a month, a massive jump that's priced many buyers out of the market. Inventory is swelling too. In 2022, there were about 1,500 active listings in the city. Now, over 3,200 homes are on the market, more than double. Sellers who were holding out for top dollar are now cutting prices to compete. Roughly 40% of listings in West Palm Beach have seen price reductions in the past 90 days. And the climate factor looms large. Flood zone remapping has put many West Palm neighborhoods in high-risk categories, sending insurance costs skyrocketing and cooling demand. Combined with elevated property taxes, the cost of ownership here is just too steep for many would-be buyers. The luxury market, once red-hot, is also slowing. High-end condos and waterfront estates are sitting longer, many for 90-plus days, as wealthy buyers grow more cautious in an uncertain economy. For buyers with cash or long-term vision, opportunities could emerge by late 2025 to 2026. But for sellers, the West Palm Beach market faces real headwinds, and the days of easy money are over. Number 3. Tampa. Tampa, this bustling city on Florida's Gulf Coast, was one of the state's biggest pandemic winners. In just 2 years, median home prices rocketed from about $310,000 in 2021 to an eye-popping $500,000 by 2023, a 61% surge. But in 2025, the market is definitely cooling off. Current median prices have already slid to around $470,000, with further declines of 10 to 15% expected in the coming months. What's causing this shift? Inventory overload is a major factor. In 2022, there were roughly 2,500 active listings in the Tampa metro. Today, over 6,000 homes are on the market, a whopping 140% increase. Builders who rushed to meet red-hot demand are now offering big incentives and price cuts, pulling buyers away from resales. Then there's the affordability crunch. A $470,000 home now runs nearly $3,800 per month, when factoring in 7% mortgage rates and hefty insurance costs, which can easily exceed $6,000 per year. Compare that to just $2,400 a month in 2021. Huge difference. Many buyers simply can't make the math work anymore. Tampa's exposure to climate risk is also becoming more apparent. Posty and flood zone remapping has left parts of the city with skyrocketing insurance premiums, driving buyers toward less risky inland markets. And while Tampa's job market is strong, wages haven't kept pace with the massive increase in housing costs. Homes that once flew off the market in under 10 days now sit for an average of 45 to 60 days, and roughly 38% of listings have had recent price reductions. Even high-end areas like Hyde Park and Davis Islands are seeing price cuts, a clear sign of a broader market correction. For buyers, there could be good deals ahead, especially by early 2026. For sellers, the window to capture peak pricing has clearly closed. Tampa's market is entering a new phase, one where patience and pricing strategy will be key. Number 2. Punta Gorda. Punta Gorda. Once a sleepy boating town, it became a darling of the post-pandemic migration boom. From 2020 to 2023, median home prices surged from around $280,000 to nearly $450,000, a jaw-dropping 60% increase. But in 2025, this market is seeing one of Florida's sharpest corrections. Median prices have already dropped to about $400,000, and some experts predict a 20 to 25% decline is still ahead. Why is Punta Gorda sliding so fast? First and foremost, climate risk and insurance shock. After Hurricane Ian ravaged the region in 2022, flood maps were redrawn, pushing a huge chunk of Punta Gorda into high-risk zones. Homeowners here are now facing insurance premiums of $8,000 to $12,000 per year, costs that many simply can't afford. Second, inventory has ballooned. In early 2023, there were about 500 active listings. Now, over 1,400 homes are sitting unsold, a 180% jump. Many retirees and investors who bought during the boom are now rushing to sell, adding more supply to an already fragile market. Affordability is a growing problem. A $400,000 home today costs nearly $3,500 a month to own when you factor in mortgage and insurance, compared to about $2,100 a month just a couple of years ago. Meanwhile, local wages haven't come close to keeping pace. The result? Homes that once sold in under 2 weeks are now lingering for 60 to 75 days, and nearly 50% of listings have had price reductions in the last 90 days. Investors who once viewed Punta Gorda as a low-cost coastal gem are now pulling back, and buyer demand has dried up. Looking ahead, prices could fall another 15 to 20% by late 2025 as the market searches for equilibrium. It's a cautionary tale of how quickly fortunes can change in Florida real estate. Number 1. Cape Coral. Cape Coral, known for its endless canals and sunny vibes, was one of Florida's most frenzied housing markets during the pandemic boom. From 2020 to 2023, median home prices soared from about $270,000 to nearly $475,000, a staggering 76% increase. But in 2025, the crash alarms are sounding loud and clear. Median prices have already fallen to around $425,000, and many experts project an additional 20 to 25% decline this year alone. Why the sharp correction? Massive oversupply is issue number 1. Cape Coral now has over 12,000 active listings, more than double the inventory seen just 18 months ago. Builders flooded the market with new construction, and now unsold homes are piling up. Second, insurance crisis. After Hurricane Ian devastated parts of Cape Coral in 2022, insurance premiums have skyrocketed. Many homeowners are now paying $10,000 to $15,000 annually for coverage, if they can even get it. These costs are driving buyers away in droves. Affordability has completely eroded. A $425,000 home now costs about $4,000 a month when you factor in 7% mortgage rates and hefty insurance, compared to just $2,200 a month in 2021. That's forced many would-be buyers to the sidelines. Homes that once sold in under 10 days are now sitting for 75 to 90 days on average. Nearly 55% of current listings have already seen price reductions, and desperate sellers are slashing prices further to attract offers. Even waterfront homes, once immune to price drops, are now seeing significant corrections. Adding to the woes, Cape Coral's economy is heavily reliant on retirees and tourism, both of which are sensitive to economic downturns. With rising costs of living, fewer out-of-state buyers are coming in. Many recent investors are also offloading properties at a loss. Looking forward, Cape Coral could see prices tumble to $350,000 or lower by late 2025 or early 2026, a stunning reversal from its pandemic peak. It's a textbook example of how quickly Florida's real estate tide can turn.